Welcome, investors. Let's discuss disclosures real quick. I am an individual investor. I am not a financial advisor. This is not financial advice. My name is Dave, and this is the Market Board. Today, we're going to take a look at stock ticker KTOS, Kratos Security and Defense Solutions. Kratos describes himself as being a government contractor being at the forefront of the Department of Defense's recapitalization of strategic weapon systems to address peer and near-peer threats and its related rapid innovation initiatives. Kratos' primary capabilities and area of focus include unmanned aerial drone systems, satellite communications and radio frequency interference and mitigation, microwave electronics including radars, missiles, UAVs, communications, and medical devices, ballistic missile defense, C5 ISR systems, which are command control computers, communications, and cyber defense for C5, and then intelligence, surveillance, and reconnaissance for ISR. Today, it's currently trading at about $26 a share, and it has a market cap just north of $3 billion. And please guys, before we move forward, if you find these videos helpful, please like, comment, and subscribe. Before we look too far into what the company actually does, let's first get to know who they are, and to do that, let's examine their management team. Today, we'll be introduced to who I believe to be their two key management team members, starting with Eric DeMarco, who's their CEO. He joined the company in November of 2003 when it was still called Wireless Facilities and traded underneath the stock ticker WFII. Since joining the team, he has been instrumental in leading the company's efforts to transition successfully from being a commercial communication business via sale and disposition of assets to build and grow both organically and through strategic acquisition a leading national security company. Prior to Kratos, he was the president and COO of Titan Corporation, which was later acquired by L3, a Tier 1 defense contractor. Under his leadership, Titan grew from approximately $150 million in annualized revenues all the way to $1.5 billion and had a backlog of over $4 billion by the time he had left. Additionally, he is also currently on the executive board and board of governors for the Aerospace Industry Association. And beside him is Dina Lunt, who has served as chief financial officer for Kratos since April of 2004. In her role, she oversees all Kratos accounting, financial matters, SEC reporting, and budgeting. She has also played a key role in various divestitures and acquisitions of the company. Prior to joining Kratos, she worked at the Titan Corporation as well, serving as the vice president and corporate controller during the same period, which saw the annualized revenues grow from roughly $150 million to the $1.5 billion before she had additionally left. So where do they have Kratos generating their revenue from now? Well, Kratos has both government and non-government customers, though it should be noted up front that 70% of total revenues the past 3 years have come from government customers. In the way of government customers, they have the Air Force, Army, Navy, Marines, Missile Defense Agency, Space Command, National Aeronautics and Space Administration, Foreign Military Sales, the U.S. Southern Command, STRATCOM, Strategic Capabilities Office, the Rapid Capabilities Office, the U.S. Intelligence Community, and, quote, certain confidential customers. And in way of non-government customers, they have Northrop Grumman, Lockheed Martin, General Dynamics, Amazon, Microsoft, Raytheon, and Rolls-Royce. When familiarizing ourselves with the competition, we see that they are in a highly competitive market and that most companies that Kratos directly competes against have significantly greater financial, technical, marketing, and other resources and currently generate greater revenues. Tier 1 government contractors that they compete against include Northrop Grumman, Lockheed Martin, General Dynamics, Boeing, and Raytheon. But didn't I just say those companies are their customers? Well, yeah. But Kratos sums it up as being the nature of major defense programs that perform well from a level of program continuity not frequently found in other industries. Meaning, it's not really unusual to compete for a contract with a peer company and then work together afterwards. And while we don't have enough time today to cover their entire catalog, we can examine a smaller piece of it to start to get a better idea of what they do. We see that Kratos' mission is to bring disruptive innovation and approaches to national security. Its products are designed up front from the beginning to be affordable, including through system sustainment, which they think should separate Kratos from large legacy industry suppliers. Specifically, we're going to take a look at their 3 tactical UAV offerings, starting with the XQ-58A Valkyrie, which is an experimental, stealthy, unmanned combat aerial vehicle designed and built by Kratos for the U.S. Air Force. Kratos established the Valkyrie to break the escalating cost trajectory of tactically relevant aircraft and provide an unmanned escort or wingman aircraft alongside a crewed fighter aircraft in combat. The Valkyrie is changing the paradigm for tactical UAS technology by delivering a combination of long range, high speed, and maneuverability alongside the ability to deliver a mix of lethal weapons from its internal bomb bay and wing stations. Kratos also cites that it's runway independent. The second offering they have is the UTAP-22 Mako. UTAP just stands for Unmanned Tactical Aerial Platform, and 22 is most likely a model number. The Mako provides the warfighter with an affordable, fighter-like, unmanned aircraft capable of collaborative operations with manned assets in contested environments. It reaches a top speed of 0.9 Mach, which is almost 700 miles per hour. The key difference being that the UTAP utilizes a minimal footprint rocket-assisted launch directly from a C-2 system and can be landed via parachute and recovered in cases where the runway is not available. And their third offering in the way of tactical UAVs is the X-61A Gremlin, named for the imaginary, mischievous imps that were good luck charms of many British pilots. The program, envisioned by DARPA, launches groups of UASs from existing large aircraft while those planes are out of range of adversary defenses. Gremlins, then upon completion of their mission, will be recovered in the air by the large aircraft and transported to facilities to undergo preparation for the next mission. It should be noted that although the Gremlins are produced by Kratos, they do team up with prime contractor Dynetics, and DARPA states that the expected life cycle of the Gremlins should be about 20 missions. When trying to investigate some of the intellectual property that makes their product specifically unique, I unsurprisingly met a lot of resistance as it's a government contractor and they're not likely to just give away their secrets. However, they do know in their most recent reports that, quote, at Kratos, affordability is a technology, and that they believe that that will be key as the DoD shifts from focusing to lower cost and even potentially disposable UAS utilization as uncertainty lingers about potential increases or decreases to the government budget. And since I just brought up money, let's take a look into the financials behind Kratos to see if it's a worthwhile investment. The first thing we notice when we look at their statements are that their revenues are broken down into 2 specific different categories, being service revenues and product sales. We saw in 2018 they posted $200 million in service revenues, and that increased to $272 million in 2019, but decreased last year back to under $250 million, though they say it's COVID related. And on the other end, we see product sales consistently grow from 2018 being $417 million to $444 million in 2019 and all the way to almost $500 million in 2020 for a total revenue in 2020 of almost $750 million, an increase from the prior year of about $30 million. When we take a look at the gross profits, we also see a consistent increase from 2018 posting about $169 million, increasing to $190 million in 2019, all the way to over $200 million in 2020. When we delve a little bit deeper into the revenues, we can see that over the past 3 years, as we already mentioned, government contracts are responsible for at least 70% of their income. They released in their latest report that they had a growth of 33.1% in their unmanned systems revenue and saw gross margins overall of about 27.2%, according to FinViz. However, it should be noted that in 2022, the DoD is expected to drop their budget further by about $7 billion additional dollars. However, Kratos anticipates that the DoD will start divesting from legacy systems in favor of new technology, which could potentially get them more contracts. contracts despite a declining budget. And then when we peek behind the curtain and take a look at institutional ownership, we see some shocking results. BlackRock owns over 7.5%, Vanguard owns almost 7%, Fidelity has almost 6%, ARC Autonomous Technology Robotics ETF has over 4%, and State Street appears to be the fifth largest holder at almost 3.5%, with total institutional ownership numbers varying anywhere between 91.83 and 95%. With this information now in mind, let's just do a brief SWOT analysis to view the strengths, weaknesses, opportunities, and threats that we face if we choose to invest in Kratos. In the way of strengths, they have significant cash flow visibility driven by a stable backlog. They have a diverse base of contracts with low concentration, and they have an experienced management team with strong connections to the US government and military contractors. In the way of weaknesses, we do see a decrease in the year-over-year budget for the Department of Defense by almost $10 billion this year. Kratos has fewer resources than Tier 1 operators, and frankly, there haven't been many successes in small to mid-cap defense contractors as it's typically been a big boy's business. In the way of opportunities, we see the DoD shifting towards lower cost systems, and that the IP secured by Kratos should actually prevent competition from interfering in the low concentration contract areas that they've focused thus far. But in the way of threats, we do need to be reminded this is a highly competitive industry, and there has already been that reduction to the DoD budget, and it might get reduced even further. Furthermore, at any point, the DoD could cancel a project with Kratos, which no doubt would impact the future of the business. But with this all in mind, we now get to the final act, my take and my position. In full disclosure, I don't have a position. In my opinion, Kratos has strong connections to federal agencies, Tier 1 government contractors, and has consistently shown an ability to not only build their own business, but the senior management team has proven that they have done it previously as well with the Titan Corporation before L3's acquisition. And perhaps maybe there's even an opportunity later for Kratos to be acquired, though that's purely speculation and not a good investment thesis on its own merit. They do have an ever-improving fiscal scenario and have applied disruption to a traditional legacy-run industry, resulting in a successful position as one of the top-rated government contractors available today. However, it needs to be said, they are at a disadvantage resource-wise compared to their competitors and are in an industry that doesn't see many small winners. Before I'd open a position, I would just further cross-examine the other T1 and T2 operators and both their qualitative and quantitative properties to ensure that I was comfortable with the value I was getting. And as just one final reminder, guys, I'm an individual investor. I am not a financial advisor. This has not been financial advice. My name is Dave, and this has been The Market.